GTII with a very impressive run followed by a last-minute sell-off, huh? Let's go ahead and just evaluate what could be happening and what the probabilities are for the coming days. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTII technicals, raw price action, and statistical thread of analysis on this happy Friday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so we are looking at GTII on the 12-hour chart here, the very same ascending channel that we've been looking at for quite some time, right? So I want to go ahead and pardon me. I want to go ahead and show you exactly what is happening here. Okay, so upon this upside that we faced today, the candle high, you can see right over here on that H, right? You can see that the candle high was $2.49, which just so happens to be rhyming with our 4-spot 618 at $2.51. So that golden mean, of course, it's going to be something that we face some resistance from. Now, what we do have to pay attention to as well is that this is more or less a shooting star candle, and it does signal a potential pullback. Okay, but the pullback does not seem to be I guess nothing in the technicals is suggesting that this could be a potential reversal. This definitely looks more like a pullback, if anything, right? So, and I mean, it's really only fair that it does do that, right? Since we've actually seen now almost 50% upside since we were looking at these signals fire off just on Monday, right? So very, very interesting times here for GTII, continuations to the upside. So what I'm looking at here in raw price action is the potential of coming back to about the area of 215 to about 209. Okay, so that could be a very important area for a bounce, and also kind of an area to reaccumulate and gather some longs for a continuation to the upside, right? So now it's the Fibonacci ratio that I'm actually taking into consideration is actually the one from down here. This is the range that I'm getting, and these were all the targets that we've been facing thus far, right? So I can also just take into consideration maybe the prior days fib, just so that we can see what the price action kind of did today, right? So we can do it just like this and go ahead and notice here that we actually came right up to the 2-spot 272. So it's still kind of rhyming very nicely, right? So I definitely like what's happening here. And yeah, it just allows more longs to kind of get into the play for a continuation to the upside, and I will explain to you why I'm seeing a continuation to the upside as well. Okay, so let's move on to the next chart and see what we have. So this is the weekly time frame, the same chart that we've been looking at for the 700 and now 50 days of well, it was actually 42, right, since we officially broke out of that resistance range that we've been facing since literally this was the first candle of resistance, right, in March 1st, 2021, all the way to literally just last week, right? So a very, very, very crappy resistance here that we've officially broken out of. But what I want to point out here are two things. First of all, yesterday we said about 1 day and 17 hours for this weekly candle iteration to close, right? And as long as we do close that candle above 187, then we would be good. I can't see the time right now because now market is closed, right? So as soon as the market opens, we'll be able to see when this weekly candle will close, which will likely be on Monday or Tuesday. All right, so that would be printing a very huge weekly bullish engulfing formation, a candle formation here, which usually happens when the green candle surrounds or engulfs the previous red candle's body, right? So that would be an amazing sign and a good kind of validator for a continuation to the upside. Another validator would be actually volatility versus momentum on the weekly, which is already pretty massive. Notice that the stochastic momentum moving averages are now entering the bullish control zone of the stochastic momentum's oscillator with a contraction phase happening, right? So that's a very good sign for a continuation to the upside. But we definitely want to know, and the upside here would be very much contingent upon the closure of of this weekly candle. Okay, so we definitely need to wait for that, and then we can validate the continuation to the upside. Let's move on to the next chart. All right, so we have here the 5-day chart, and this is volatility again versus momentum. And I just want to remind you that 2 days ago we got that candle closure of the 5-day, pretty much signaling a continuation to the upside and the continuation of contraction here for volatility, which is essential for the continuation of a statistical move to the upside, which would take us to about the corrected target that we looked at yesterday of $3.28. Okay, so this move is still in play and is still suggesting an upside continuation. Let's go ahead and look at now the 3-day. Please remember, okay, so this got a little bit of weakness here on the 3-day, but that's entirely okay. We're still within the bullish control zone. That doesn't mean that we can't pull back a little bit and continue on to the upside. Remember, guys, it's just part of the natural ebb and flow of the market cycles. Okay, so yeah, so we're still on an uptrend here. We're still contracting, and the statistical move is still on. So the probabilities are definitely on the bulls side. Okay, but upon more weakness, this is already showing a little bit of weakness. Of course, it's signaling a potential pullback. Okay, so which could be in line to the targets that we looked at on this chart right over here. Okay, downwards to about $2.10 before a continuation to the upside. We'll validate that as we go, though. Okay, so now let's go ahead and look at the last part of the analysis, and this is going to be the RSI, which is very important to look at. Why? Because this is going to tell us essentially where we could find some relevant supports in the immediate short-term time frame to the medium time frame, right? So go ahead and notice here that the 30-minute immediate short-term is still suggesting a downside continuation, but notice how aggressive it was here, and then now it's kind of pivoting to the it's starting to make a pivot here. So that pivot usually suggests kind of the bear strength is kind of diminishing a little bit. Another thing is that we're in the gravitational zone of the bear strength percentile, which could essentially have us just temporarily live within this area, followed by a continuation to the upside. Okay, so now the 4-hour time frame is suggesting a continuation to the way down. Of course, it's doing that pivot very similarly to this right over here, right? And it is in respects to being in the gravitational zone of the bull weakness percentile. Okay, so where we're starting to see that this is a temporary downside, which is probably about Monday and Tuesday at the very most, before a continuation on Wednesday or Tuesday, right? So we can actually see that the 8-hour time frame is right at the support of the 14-day simple, as well as the gravitational zone of the bull weakness percentile. Go ahead and notice here that the daily time frame is also suggesting a potential bounce from the gravitational zone of the bull weakness percentile and the 14-day simple moving average. Okay, so this is signaling a potential support, just like it did right here, right? And then we continued on to the upside. So now notice, moving from the daily time frame into the 3-day, notice the upside here on the 3-day, still suggesting that continuation. Notice the 5-day still suggesting that continuation, and this 3-day is getting close to the gravitational zone. So that's why I'm telling you that this pullback is very, very much understandable, and it could be very temporary. Okay, so guys, refer to the links in the description below if you would like to reserve a seat in the ARC Masters trading course that I will be starting in the second week of likely the second or third week of April, right? It's going to be Saturdays at about 5 p.m. Pacific. Yeah, so go ahead and refer to the links in the description below where you'll see the email to contact me, but you can always contact me on Twitter DM or Discord DM or my email here in the About section of the YouTube channel, whatever suits you, right? So go ahead and reserve your seat now, get enrolled, and let's learn together. So remember, I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever, never, ever, ever, forever. Okay, you guys, so remember to do your own due diligence and everything will be cool. All right, so I want to wish everybody a great rest of your Friday, if you're, depending on the time zone, right? Now I realize that so many different people around the world, I can't really just talk for California now. So yeah, so I guess I wish you a very good weekend, and I will catch you at the bell on Monday. Adios.